there anything Jay Powell can or might say today that would change your fundamental longer-term thesis?
Well, I suppose what would make me, negative would be if I really thought that they were going to raise rates enough to snuff out this economic recovery. And I think that's really what the market was worried about last week. We got some reprieve from it yesterday, but what you saw in the markets last week after the Fed and Bullard were really, the yield curve really, flattening. That is just simply showing that the market thinks you have I would say more of a chance of going into recession. And I don't want to say it got into any sort of numbers that looked like that. But what it really was reading through was, hey, we're worried that you're going to move too fast and snuff this thing out. And that's why you saw, the value stocks just get crushed. Anything kind of cyclical pretty much get hammered, and the growth side of the equation, kind of the COVID playbook, if you will, really pick up.
Everybody kind of assumes, which that statement alone, Bill, is automatically very dangerous, that 10-year yields are going to end the year above 2%. Well, of course they're going to end the year above 2%. They're still below 1.5% right now, Bill. What if they don't? What happens if interest rates don't move higher? Or like Scott Minerd says, move even lower, despite that's not being the consensus call by any stretch.
Yeah, well, I hope he's wrong about his number being that low, because I think at the end of the day, a move up, at least some sort of a, relatively stable move up in yields is probably just a signal that the economy is continuing to get better. It's hard to kind of square the circle if you've got inflation running. And I'm going to say, obviously headlines at 5%, but there's a lot of noise in there with those, base effects versus last year. But let's just say our analysis would say we're probably a legit, underlying inflation rate is somewhere in the high 2s, maybe even the low 3%. It's hard to say that that's a very, appropriate 10-year yield for that kind of inflation number.
Yeah, you just heard us talk with Christina about vaccinations. Is this one of the reasons you think that Pfizer stock is a good bet, or is it really a combination of other things, including, sadly, the myriad of other diseases that we had to face pre-COVID and will face post-COVID?
Yeah, I think Pfizer is interesting because you've got the kind of, again, it's sad to say, but the insurance against, kind of if COVID continues to, and it probably will be with us at least in some form, I don't know, for however long. So you've got the vaccine out there. They'll probably have to have boosters over time. So it's probably, again, sad to say, a long-term franchise for them. But then aside from that, the main point is a very diversified company. Some of their vaccine business, frankly, otherwise has been hurt because people, again, COVID related, didn't go to the doctor as much, didn't get certain vaccinations aside from COVID, those kind of things that will pick up as we continue to reopen. And I think they also showed themselves obviously clear experts in the vaccine field. So I think that continues to be attractive, sells for a very low PE and a high dividend yield.
Shepard Smith here. Thanks for watching CNBC on YouTube.